$4,641.40. That's where gold closed on January 14th, 2026. But here's what should terrify every investor who thinks the financial system is stable. That record high came just 3 days after the Federal Reserve Chairman announced he is under criminal investigation by the Department of Justice. 3 days, from announcement to all-time high. And if you think that's coincidence, you haven't been paying attention to what happens when central bank independence collapses. Let me walk you through something that's unfolding in real time. A constitutional crisis that's triggering the largest precious metals rally in modern history. And why the next 60 days could determine whether we see gold at $5,000 and silver above $100, or something far more dramatic. I'm not a financial advisor. This isn't financial advice. This is purely educational analysis based on publicly available information that anyone can verify. But by the end of this video, you'll understand exactly why multiple major banks just emergency revised their precious metals forecasts upward within 72 hours. Sunday night, January 11th, 2026. Federal Reserve Chairman Jerome Powell issues a public statement. The Department of Justice has sent these subpoenas to the Federal Reserve. Criminal prosecution is being threatened over a $2.5 billion renovation of the Fedi's headquarters building. Powell's statement is unprecedented. He writes, "The threat of criminal charges is a consequence of the Federal Reserve setting interest rates in the public's interest, rather than following the president's preferences." Read that again. The chairman of the Federal Reserve is publicly stating that criminal prosecution is being used as intimidation to influence monetary policy. This isn't a theory. This isn't speculation. This is the head of America, a central bank, saying the executive branch is attempting to control interest rate decisions through criminal threats. Monday morning, January 12th, 2026. Markets open. Gold immediately surges 1.28% to an all-time high of $4,568.36. Silver explodes 4.54% to $83.58. The message is clear. When central bank independence is threatened, money flees to hard assets. Always. Let me show you why this pattern is so predictable and so dangerous. In 1979, a different kind of central bank crisis unfolded. Iran's revolution destabilized Middle East oil supply. The dollar's credibility was already damaged by Nixon closing the gold window in 1971. Inflation was ravaging the economy at 13%. And the Federal Reserve was caught between political pressure to keep rates low and economic reality demanding they rise. What happened? Gold increased 160% over 2 years. Silver went from $6 to $49 in 18 months, not because of mining supply issues, not because of industrial demand, because trust in fiat currency and central bank credibility collapsed. That's the pattern. When people lose faith that central banks can act independently, they convert paper promises into physical reality. Gold, silver, real assets. Now let's fast forward to today. By Wednesday, January 14th, just 3 days after Powell's announcement, gold hit $4,641.40. Gold is up 22% year to date. In 2 weeks, silver surged over 6% in a single day, crossing $90 per ounce. Silver is up 29% year to date, after gaining 141% in 2025. This isn't normal market movement. This is panic buying. But here's what makes this different from 1979. In 1979, the crisis was economic policy and geopolitics. Today, we have that same geopolitical chaos with Iran and China. But we also have something far more dangerous. A direct attack on the institutional independence that's supposed to protect the currency system from political interference. Powell's statement continued. This is about whether the Fed can continue to set interest rates based on evidence and economic conditions, or whether monetary policy will instead be run by political pressure or intimidation. Think about the implication. The Federal Reserve Chairman is publicly stating he's being intimidated by his own government to manipulate interest rates for political purposes. Market reaction was immediate and bipartisan. Republican Senator Tom Tillis stated, "I will oppose the confirmation of any nominee for the Fed until this legal matter is fully resolved." Former Treasury officials from both parties condemned the move. Global central bankers expressed concern. This isn't a partisan issue. This is a systemic credibility issue, and markets know it. Here's where the math gets really interesting. On January 14th, Citigroup analyst Kenny Hugh Emergency revised his near-term price forecasts. Gold, $5,000 per ounce. Silver, $100 per ounce. He cited increased geopolitical risk. But let's be precise about what that means. Geopolitical risk isn't just Iran or China anymore. Geopolitical risk now includes whether the world as reserve currency is controlled by an independent central bank or by political pressure. That's a fundamentally different level of systemic risk. Bank of America published analysis suggesting silver could peak between $135 and $309. Not $50, not $75. between $135 and $309. Why such dramatic numbers? Because when you combine industrial supply deficit with monetary crisis, the moves become exponential, not linear. Now, let me show you what's happening beneath the surface. U.S. Treasury bonds fell after the Powell announcement. The dollar weakened. Analysts are calling this the return of the sell America trade. What does that mean? It means global investors are reducing exposure to U.S. dollar-denominated assets because they're questioning the institutional credibility of American financial management. When the world loses confidence in your institutions, they sell your bonds and buy hard assets. This is what financial analyst Mike Maharrey calls the real story. He wrote, "Gold and silver hitting record highs again and again is not just a story about metals rising. It's a story about the dollar weakening, erosion of confidence, and de-dollarization playing out in real time." De-dollarization. That's the process where global trade and reserves shift away from the US dollar. It's been happening slowly for years. China and Russia settling oil trades in yuan, BRICS nations developing alternative payment systems, central banks globally increasing gold reserves. But the Powell investigation accelerated it because it confirmed what critics have been saying. The system can be manipulated. Independence is not guaranteed. Political pressure can override institutional norms. And when that becomes undeniable, capital flees. Here's what concerns me most about the current setup. This isn't just one crisis. This is multiple simultaneous crises converging. Crisis 1, Fed independence under attack domestically. Crisis 2, Iran threatening U.S. military bases if America intervenes in protests. Crisis 3, China restricting silver exports and buying metals aggressively. Crisis 4, U.S. military action in Venezuela to capture Maduro. Crisis 5, Trump stating Greenland becoming part of the U.S. is not negotiable. Each one of these individually would move precious metals markets. Together, they're creating what some analysts are calling a perfect storm, and the Fed investigation is the accelerant, because it attacks the foundational assumption that supported dollar hegemony for 50 years. The assumption that the Federal Reserve is independent, that it makes decisions based on economic data, not political preferences, that it can resist pressure from whoever occupies the White House. That assumption is now publicly, explicitly, undeniably in question. Powell said it himself. Criminal prosecution is being threatened because the Fed won't follow the president's preferences. You cannot unring that bell. Global investors heard it. Central bankers heard it. Sovereign wealth funds heard it. And they're responding by buying gold and silver at a pace we haven't seen since 2011. Let me address the obvious question. Could this just be temporary panic? Could metals pull back once this resolves? Absolutely. Every bull market has corrections. But ask yourself this. How does this resolve? Either the Justice Department drops the investigation, which confirms political interference works when there's enough pressure, or they proceed with prosecution, which means the Fed chairman is criminally charged while trying to set monetary policy. Both outcomes damage credibility. Both outcomes confirm that Fed independence is negotiable, not absolute. Both outcomes push investors toward hard assets. That's why Citigroup revised to $5,000 gold. That's why Bank of America is modeling silver above $135. That's why Jupiter Asset Management's Ned Naylor Leyland said investors should definitely assume silver breaks $100 this year. These aren't fringe predictions anymore. These are major financial institutions, emergency revising forecasts, because the fundamental assumptions supporting the system are being questioned. Now let's talk about what happens next. If gold breaks $5,000, which multiple analysts now consider likely in the first half of 2026, silver follows. Historically, silver moves faster and more violently than gold during crisis periods. A 20% move in gold often translates to 40% or 50% in silver. If gold goes from $4,641 to $5,000, that's roughly 8%. But if the move continues to $5,500, which is being discussed, that's 18%. An 18% move in gold corresponding to a 36% move in silver from current levels puts silver around $122, above $100 decisively. And if the gold-silver ratio corrects toward historical norms during that move, the numbers get even more dramatic. The ratio just hit 50.2 to 1. Historical average is closer to 15 to 1. At $5,000 gold and a 30 to 1 ratio, silver is $167. At a 15 to 1 ratio, silver is $333. I'm not predicting we get there tomorrow, but I am saying the catalysts are in place. The Fed independence crisis isn't going away. Iran tensions aren't resolving. China's export controls are permanent policy. Industrial demand continues rising. And now you add institutional credibility collapse to that mix. Here's what I think people are missing. This isn't about whether Jerome Powell did something wrong with a building renovation. This is about whether the world believes the U.S. Federal Reserve can resist political pressure. And the answer, based on Powell's own statement, is that pressure is being applied through criminal prosecution threats. That's unprecedented. That's systemic. That's the kind of thing that ends currency regimes, not quickly, not overnight, but inexorably. The British pound was the world's reserve currency for 100 years. Its decline took decades, but it was marked by moments when credibility cracked, when institutions showed they could be pressured, when independence was compromised. We might be watching one of those moments right now. And the price of gold and silver is telling you that global capital sees it too. You don't have to believe me, but you should verify the facts. Read Powell's statement yourself. Check the price movements on January 12th. Review what Citigroup, Bank of America, and Jupiter Asset Management are forecasting. Look at U.S. Treasury yields and dollar performance. It's all public, all verifiable. And when you see it, you'll understand. This isn't hype. This is a constitutional crisis meeting, a monetary crisis meeting a geopolitical crisis. And precious metals are the only assets without counterparty risk, the only assets that don't depend on someone else's promise, the only assets that have survived every currency collapse in human history. The Fed independence crisis is here. It's real. It's accelerating metal prices right now, and the window to position before the broader public understands the implications is closing fast. If you want to follow along as this unfolds, I'll be tracking every development. Do you think the Fed investigation pushes gold to $5,000 in the next 90 days? Drop your thoughts below. This might be the most important financial story of 2026.